Hello, traders. It's 8 a.m. Chicago time on the 24th of June 2020. Today's Wednesday. This is episode number 1783. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off as the market drops, and I'm seeing red across my quote board. The only thing that's up today is the dollar index. The dollar index is at $96.93.5, up 32.5 cents or 0.34%. Pretty light volume, just 82.50. But everything else is off, especially the DAX. The DAX is a laggard today, down 206 points or 1.7%, followed by the Euro stocks down 50 points or 1.5%. And that's how this thing is rolling. This is, of course, not that it matters for us day traders. It really doesn't. But U.S. stock futures fell with world stocks sliding as spike in coronavirus cases dented appetite for riskier assets. Oil prices dropped on demand worries. The dollar edged up as hopes of a rapid global economy recovery waned. Gold prices soared to near 8-year highs. Investors ran for safety. Gold this morning trading at $1,777.20 in the August contract, down $4.80 or 0.27%. The S&P 500 is off 13.5 points. It closed weak yesterday, and overall it just looks like the market is pulling back, and in the S&P, it's pulling back to the prior balance, which is very interesting. The biggest drops overnight happened around 2:36 my time, 3:36 Eastern. I'm just looking at this thing, and there was a lot that came out overnight for Europe. The IMF just now announced that it expects that the global economy will contract by 4.9%. That's a lot. By 4.9% in 2020. Previous estimate was -3. So overall, just not the greatest of news. The It looks like the main thing that was released overnight of consequence here is the German IFO business climate came in at 86.2 versus 85.1. But today we get crude oil inventories, distillate gasoline stocks, and we have Fed's Evans at 12:30, and we have Fed's Bullard at 3 p.m. Eastern. Okay, so that's how things are shaping up today. It looks like risk off. We are back in balance, and the answer to yesterday's question that I posed to the group is that we are responsive. The market was going to choose to be responsive. Um, and so we're back to where we were. So quick recap of yesterday. Here's the stance we were in before the market opened. The market was trading around 31.33, and the primary expectation is a small pullback, looking for a base around 31.25.50, if you recall. And then the market was expected to push the overnight high at 45.75 and start working itself towards 31.57 and 31.60. That would be the initiative stance of the market, meaning it's moving away or rallying away. Um, the responsive scenario two is what worked out, but scenario two didn't manage to push as far as I would have liked. Yesterday's range was absolutely pitiful. Uh, Scenario two, a quick attempt higher at 31.45. You see it right there against the stock zone, 31.45. Then roll over and consolidate somewhere in the 31.20 range before it comes back in and ends up right on top of the balance. Okay, so check it out. Here's what happened. Like I said, awful range. Look at that range. It's terrible, terrible. But we did push to 31.37 early. Then we went to 31.45 on the dot. 31.45, that's a stock zone from yesterday. Here it is, gray band reaction area. And then the expectation is it would pull back to 3113, consolidate, and then push down into the 3100, 3102 area. That was what was expected. Ran out of time yesterday, was completely bounced. Neutral day, technically neutral extreme down, but there was no trend yesterday. The market was completely bounced, and so the value area is important for today. And guess what? Value low yesterday was at that same price from the overnight session at 31.25.50. Pay attention to that price. If the market starts to push higher, we're looking for that 31.25.50. And if you recall, the day before that, we were paying attention to 31.04 to 31.10. Do you remember this box? 3104 to 3110, and I said if it pushes through that, it is likely to attack the most recent high, and boom, there it is. This is from a couple days ago. Let me show you that right here. 3104.05 to 3110. This was very important, and what we ended up testing is 3109.50 on Monday before pulling back and then finishing somewhat strong, but the 3110 area held up pretty good, and here we are right at that same zone today. So what we have is kind of a carryover from last Friday's trend day, which we're basically inside of. I mean, we did poke the high, we pushed 31.44 to 31.45, right? But overall, we're still trading. We spent most of yesterday trading the upper distribution. This is how an auction is supposed to work. But of course, on a gap, the expectation was a little more range, a little more volatility. And now, the market's trading down here at 3104, putting us right on top of the composite high volume node. So let's switch. Let's get these stock zones out of here. And then, so there you have it. So what we had overnight is a continuation of scenario two. It managed to get down into where it was expected to go. Responsive meaning coming back into balance or coming back towards balance. And we had a coming back towards balance, and we are basically right on top of it now. We did manage to push to the other side. If you recall, 3077 has been 3077 to 3070. This area right here has been in play quite a bit, right underneath us, and we are at 3081 in the overnight low. So we've pushed to the high volume node, we've tested the other side, and we've come back to the high volume node, and so we are in balance. Given that we are in balance, we extend this profile forward, the red profile that you see building up. And so we are filling in quite a bit. It's really important for this market to kind of hold the 3060 area down here to keep building up the balance zone, which will propel us to the next balance area up top, 3189.50, or the next balance area down below, which is a little bit farther down in the 3020, 3030 area. Okay, so we're moved away and we've come back. So what have we done? We have broken down right on top of the 3100, tested down, moved up, tested lower, moved up, broken higher, consolidated for a couple of days, breaking higher again, coming back into balance, testing balance from below, coming back into balance, testing balance from the top, coming back into balance. See how that works? And this is exactly what we would expect. For those of you who got the webinar series I did for charity back in 2010, it was up 2010 through 2018, I think. Wow, 8 years those things were up. Those of you who did that saw in webinar 2, I explained how the market likes high volume nodes and it tends to chop around high volume nodes. And you can look, we're looking at this on a multi-day, on a swing basis, on a multi-day basis, but the same kind of behavior is expected on a tick chart, intraday, small time frame. It kind of behaves the same. It overshoots, undershoots, goes back and forth, back and forth, back and forth, and that's where we are. We are dead on top of the high volume node. It's important to recognize that the more time we spend here, the more fuel we gain for the next move out of here. So the next move out of here, given the amount of time we've spent here and the number of positions taken, 10.9 million contracts traded here in the last week and a half or 2 weeks. Yeah, it's about 2 weeks, a week and a half. 10 million contracts have traded in this range, and the more that trades in here, the more the breakout is going to be powerful from here. And so you don't want to fade a strong breakout from here. You want to go with it. You want to hang tight, in my opinion. So that's where we stand yesterday. We ended up finishing, again, negative on a neutral day, with Delta being down all day long. If you notice that Delta just never saw the light of day yesterday, even on the way up. I made a comment in Convergent Chat Head Trader channel that I'm not liking the way. I'd like to think that this is initiative. The action yesterday almost looked like scenario one, where we test down, we impulse up, consolidate, and I would expect this to continue higher. But I made a comment that the delta in this is negative. It's constantly pushing lower. It is not looking very healthy. And so we ended up with a somewhat negative day today. Let's move over to look at CT Bookmap for the heat map. This is what's happened overnight. Basically, we reopened where we closed and we pushed towards 31.30. Couldn't quite get there. The overnight high is 31.28.50. Remember, 31.25 is one that we would want to keep track of right here. 31.25, these tops. And then we dropped pretty hard on the German IFO number for some reason. I'm sure there's some other news there. We dropped pretty hard on an impulsive move down. We see a lot of collisions. You see these collisions against liquidity, a lot of collisions on the way down, and then we have a small pullback and a continuation. So impulse, pullback, continuation, and we are going through the kind of corrective phase. The area to keep an eye on early on is right here at 31.10 in the overnight session. You want to keep an eye on where this liquidity was. You could see that this here traded 646 contracts at 31.10. 646 contracts at 31.10. So 31.10, we want to see how that responds this morning. Might see it push up against it before it fails back down and comes into balance in the lower distribution. So that's how things are set up this morning. Delta is negative in the overnight session. Let me pull up the overnight chart, actually. 1 second. And then let's move to today's plans and call it a trader bite. Here we go. So the overnight session, there it is. See, the delta is negative. We are below the opening price. Inventory is mostly negative. Inventory is mostly negative. A very clear line in the sand here at 31.10, the low volume node. We're going to keep an eye on that VWAP mid on top of each other with the point of control underneath us. We want to see how it treats the 31.10, and we want to see how it treats yesterday's low, which was 31.15. These are key areas. If it pushes through, especially with force, then we're looking for it to pull back to 31.10, 31.15 for a long, and in that case, we would be aiming for 31.32 back into yesterday's balance, back into yesterday's point of control. Keep an eye on 25.50 on the way up. So what did I just say? What did I just say? If it opens and it pushes through the 10.15, okay, if it pushes through the 10 and 15, then we're looking for a pullback in those areas, 10 and 15, somewhere in there. We're going to pay attention to 25, 50 for initial resistance. By then, your risk should be off, in my opinion, but the target is 31.32. Don't mind the scale here, the scale's off. 31.32.50, that would be the key target from yesterday. So then we're testing the low volume node, we're testing the prior day's low, and we're testing the 25 area, the important 25 area. And then once we get through the value low, which was 25.50, then we are very likely to get that 32.50. Okay, so that's where we stand. Let's take a quick look at what we're expecting for today. All right, turn on the stock zones. All right, here we go. So what is the primary expectation here given the configuration of the market, the current configuration of the market? Again, we are on top of the point of control. We do have VWAP and mid above us. We do have the high volume node above us. The expectation for today is an open auction that tests down, then moves up, consolidates at the high volume node, and I'm expecting it to walk up into the 3110, pull back, 3115, pull back, and then squeeze towards 3125. Okay, 3125. And if we do have a lot of strength, then the key target is going to be right here. This will be the, yesterday I drew a bullseye. Here's another bullseye for you. Okay, that's scenario one. Is the bullish scenario as we come back and retest balance from above. The secondary is an open auction that pushes up above 3100, confronts the 3105 to 10 area, consolidates, and then fails. If it fails and I'm looking to sell, a pullback into 3100, 3102, and I'm looking for the overnight low stat, and then we start to move towards towards 3077, and in that case, the big target, the big target is right here at 60. Okay, that's the big target down below. Not expecting it to cover it today, but it might. That's the scenario where it fails to hold the 3100. So we have today a very clear line in the sand. We're opening on top of the high volume node, the MC point of control, the 3100 century figure, and so on and so on and so forth. And does it hold that area or not? As long as it's chopping around in this high volume node area, I'm not going to do anything because it could go either way. So it could go in either direction. So I'm not interested in how that plays. I'm going to pay attention to the delta very closely, and I'm going to see that I'm going to see how it plays out and breaks out of here. Pay attention to rotations today. Very, very important. They'll tell the story early on, and my goal is to jump in the direction of strength in those rotations. Okay. Good luck today, and I'll catch you tomorrow morning. Take care.